Hello and welcome to everyone joining us today for the Open Banking, Transforming Lending and Member Experience for Credit Unions webinar. It looks like folks are continuing to join and there's already tremendous turnout, which mirrors all the interest and demand my colleagues on the panel and I are seeing in the market around open banking and cash flow underwriting. But let's go ahead and get started. My name is Brian Rashevsky. I'm the CEO of Edge, a cash flow underwriting platform built by lenders for lenders. And I'm happy to be moderating the session this afternoon. Before we jump into the conversation, I have just a few housekeeping items about the session today. All of the modules you see on your screen are customizable. Feel free to maximize or minimize modules as you see fit. At the top right of your screen, you'll see a module where you can visit all panelists' websites or download assets relevant to today's conversation. There is also a Q&A module. Questions can be submitted anytime and questions will be anonymous. Out of our 45 minutes today, we're holding 10 to 15 minutes at the end for these questions. If we don't get to all the questions at the end, we'll include them in a follow-up email with a link where this webinar will be available for playback on demand. With that, allow me to introduce our panelists. Up first, we have Paul LaRusso, CEO of Acquoia, the only 100% API-based data access network. Paul is responsible for the strategic, financial, and operational leadership of Acquoia and works closely with the board of directors. Prior to Acquoia, he spent 14 years at Chase, most recently as the head of Connected Bank Open Banking, where he led the industry in building out the infrastructure to deliver greater control and protection for consumers sharing their financial data. Paul, great to have you with us today.
Thanks, Brian.
Next, we have Kareem Saleh, the founder and CEO of Fairplay, the world's first fairness as a service company. Before starting Fairplay, Kareem held executive positions across companies such as Zest AI and SoftCard, and served in the Obama administration, leading topics like climate change and private investment. Kareem, thanks for joining us today.
Thanks, Brian.
Last but not least, we're joined today by Amy Demke. Amy is the Senior Vice President of Lending at Trias Federal Credit Union. With over 22 years of experience at Trias, Amy has been a driving force behind the strategic initiatives that prioritize a member-first culture. Her leadership has been instrumental in ensuring the credit union stays at the forefront of technology and financial services, contributing to Trias's ongoing success and growth. Happy to have you, Amy. With that, let's jump into the discussion. To set context and build from a shared understanding, let's start with the basics of open banking. What is it? How did it come about? And as we're seeing it evolve in the financial space, what are its benefits? Paul, I'm going to start with you, given Acquoia's central role in the open banking ecosystem and the leadership you've had in shaping the industry. Maybe you can field this one.
Sure. So open banking is when a consumer or a member decides to link their financial information to a third-party application of their choice. Typically, you'll see a member looking for an application that might help them manage a budget, perhaps make a payment, or get approved for a loan or a line of credit. And the member is deciding to use their financial information to help facilitate that process and get that job done. The concept of open banking is actually not new. It's been going on in the US for probably about the last two decades, where consumers used to do basic account linking, like QuickBooks or TurboTax and so forth, Quicken. So this has been going on for quite some time. But what we've seen over the last 10 years or so is a significant uptick in this usage, particularly because you've had a mass adoption of smartphones. You have a plethora of now fintech and third-party applications giving consumers more choice. And then you also have consumers choosing to use digital as a primary way to engage. So all of these things have kind of led to a significant increase in how consumers are using open banking today. Visa did a survey on this about a year ago, and they actually asked consumers, and 91% of Americans have actually linked their bank account or their credit union account, financial account, to some type of third-party application. And that number even goes up if you look at a younger population like Gen Z, it's 96%. So members are doing this today. And it's been going on, and we kind of continue to see this uptick in growth. I think the term open banking is a little bit of a shifting to how does the industry move to doing it in a more secure way? Because as it's been going on for the last 20 years, it hasn't always been secure. A member would typically have to give out their username and password. Their information would be accessed through an old service called screen scraping, where basically all their information could be accessible. And that provided a lot of risks, not only to the credit union, but also to the consumer around potentially having access to more information than what was needed to get that job done. So now the industry is talking about open banking, where we're moving to more of a secure API-based industry, where the member would have the ability to actually securely transfer their information through an API. They get to decide which application gets their data, which accounts gets their data, and they have more control and visibility around which third parties and applications are able to do it. And then ultimately they have the control to actually turn it off and toggle it off and manage that. So that's kind of how the industry is moving to open banking, which is a little bit more of secure APIs, still giving members and consumers control and visibility of all their data, but now doing it in a safe and secure way.
Great, thank you. All right, turning to focus on credit unions. Amy, you're going to be up first. So why open banking should be our priority for credit unions? Since you're our panelist on the front lines of member care, I'm going to start with you. You're on, we're not able to hear you.
You can't hear me?
Yep, you're back.
Okay, sorry. So when Tri started to take a look at open banking, we went through this journey with Edge, and it was just really eye-opening to us how much of our members' data was actually leaving the credit union, and we didn't know it. It was out there for the fintechs to grab. It was out there for everybody to be competitors with us. And we really took a look at it and said, we've got to get into that ball game, and we have to be able to compete with the fintechs, because we all know they're out there trying to get our members business. And so we really took a strong look at how can we do that? And partnering with Edge was the right decision to do that. We decided to make that switch sort of like from an offense rather than playing defense, if you will. And the opportunities, they're endless. The business opportunities for us to be able to do loans, to be able to see the things that our members are actually doing that we were unaware of, the opportunities for them, for us to help improve their lifestyle, improve their credit, improve their journeys and their financial journeys, that's huge for us. And that was the big thing, the turning point for us, and why it should be a huge priority for every credit union.
Thank you. Kareem, you're up. We haven't heard from you in a while, or yet. You guys serve a lot of credit unions. What's your perspective on this?
Yeah, I think there are four main reasons for credit unions to prioritize open banking. The first is just the competitive advantage it gives you, right? Open banking levels the playing field. It enables credit unions to deliver fast, data-driven financial services that rival larger institutions, but without the overhead of big banks.
Right.
The second reason, I think, for credit unions to prioritize open banking is the ability to enhance your member experience, right? So real-time data powers quicker loan approvals, targeted offers, personalized services. All of that allows you to give members fast, relevant financial solutions. The third is the way that open banking can optimize your operational efficiency. So by removing manual steps like bank statement uploads, open banking can streamline loan applications, boost efficiencies, and add less or reduce friction in your member interactions. And then finally, I think the key reason, a key reason for credit unions to a key reason for credit unions to prioritize open banking is its alignment with your core values, right? Open banking amplifies credit unions' member-first mission. It allows you to unlock broader financial data to better serve perhaps historically underserved populations through improved risk profiling and innovative product design.
Thank you. Paul, you're up. How do you see the importance of open banking for credit unions?
Yeah, I agree with Amy and Kareem. I'll add two other points. A little bit of what Amy mentioned. Your members are doing this today. And it's super important to protect your members and to give them the control and visibility around how their data is being accessed and used. And today it's happening, but it's lacking that visibility to the member, and they don't have control to turn this off if they were to use an application and no longer wanted it. So I think giving that member, putting them at the forefront and giving them the visibility and control to do this, I think is super important. And then the second piece is around the credit union protecting its own systems and infrastructure. If you don't move to a secure kind of front door, you're leaving the back door open and the infrastructure open for a number of risks, penetrating the system, accessing the system, potentially taking down systems or interrupting the experiences that your members might have on your own platforms. So I think there is a significant amount of risk reduction you can get on this when you move to a more secure API on the front end to close that back door and mitigate a lot of the risks open today with your systems and infrastructure.
Thank you. Amy, I'm going to come back to you now. It's clear that open banking is here to stay, and it's a requirement, if you will, for all credit unions in the coming few years. What would you say is the most exciting aspect of open banking for credit unions from your perspective? We can't hear you again, Amy.
Can you hear me now?
Yes.
I don't know why it's doing that. Sorry.
Yeah. Okay.
From our perspective, it's more of everything. So if you look at what your members are doing now, and one of our theories is you have to meet the member where they are. And a lot of our younger generation and even our older generation, people want to do things digitally. They expect digital solutions. They expect that they have the opportunity to do that. And I think Paul alluded to the fact that, 90% of people are already connecting their bank accounts. So they're expecting that stuff from us. So allowing us to do this, the exciting part is we can streamline our loan process. We can streamline the application. We're not having to ask them to come back for income verification or documents. We're able to have less friction, faster approvals, more look to books. It's allowing us to personalize every situation for the member because we get to see the whole financial picture. We get to see everything they're doing. We bring up the buy now, pay later industry. I know I did see something that they're going to start reporting to credit bureaus, but how accurate will that be? Some of those terms are so short. The great thing about this is we can see and search every buy now, pay later that they're in. And my underwriters, they geek out over this. They go through and they look at, what is their behavior and what is it they're doing? Not only is it a good loan decision, but how can we counsel them and how can we help them to make a better decision? Or is this their way of life and what they want to do? So getting to see their full cash flow picture allows us to approve more loans. And the other big thing is all of those gig economy members that we have, the Uber drivers, the waitresses, people who do that everything in cash, we can see all of that and we can cadence those deposits. The other great thing that's a little bit outside of the box is we're able to use those edge reports on our collection side of our business as well. So if a loan does go bad, we go back to looking at that and seeing what we can see behaviorally or how we can help or even collect on those loans.
It's interesting. Okay. Paul, what about your perspective?
Yeah, I think one of the exciting parts about this is that when you stand up the APIs and you build this secure channel for third parties, you can also use the APIs for your own businesses. And we work with a lot of credit unions where you could really start to take advantage of on-us data or first-party data broader within your financial institution. So if you're managing a book of business and you've got roughly half of your members who use you as your direct deposit, you can start to use that data through APIs internally and start to share it with some of the underwriting, credit decisioning, and start generating more of that from cash flow data. So I think that's super exciting that these APIs are very, you can use them for many different use cases. And just like you can expose them for external use, you can also expose them internally and help speed up your operations. And as Kareem was pointing out to earlier, really start to improve a lot of experiences across your institution, both from underwriting as well as operational.
Kareem, you're up. What's most exciting for you?
Yeah, I think there are several exciting aspects of open banking for credit unions. The first, as I alluded to earlier, relates to the ability to deliver financial inclusion at scale, right? Open banking enables credit unions to serve members who are often overlooked by traditional credit reports. So thin file borrowers, gig workers, low-income households, all of those are communities that you can do a better job of serving by leveraging real-time cash flow and transaction data. I think a second really exciting aspect for credit unions relates to the ability to deliver more personalized member experiences, right? If you have deeper insights into your members' financial behavior, you can offer faster, fairer credit decisions, more tailored products, smarter recommendations, and more relevant financial education. And that both enhances engagement and loyalty. The third is, and I think Amy alluded to this, is kind of more proactive account management, right? So credit unions, open banking data allows credit unions to monitor financial health in real time. That allows you to do early intervention with at-risk members and also to create more flexible servicing strategies that can support long-term member success. And then finally, again, I think, open banking offers credit unions tremendous opportunities around competitive differentiation, right? You can now offer digital first experiences that members expect without compromising your values around transparency, trust, and community.
Okay, well, thank you. Let's move on to some of the challenges with open banking and the implementing of open banking within a credit union. Amy, I'm sure you've seen a few bumps in the road as you went through this process. Can you share some of those with us, and how did you overcome them?
Yep. So first and foremost, all of the data that came our way in the beginning, it was, what do we do with that data? Mm-hmm. What is useful to us? How do we navigate that? And of course, change is always hard, right? So when you're used to just looking at a credit report or just doing your normal underwriting ways of loans, that was a little bit of a bump in the road. And communicating to our members, what is it that we're exactly asking you for, and what does that process look like? So that was a little bit in the beginning, but now I would say that's a very small challenge, because now we wouldn't live without it, and we don't get any resistance from our members at this point. And I think one of the easiest parts for that was working with a trusted partner to help us navigate those bumps in the road. The other thing was, starting small, taking a look at all the different things that you can do. It's one thing to verify the income. It's another thing to start looking into what other loan opportunities are out there, or is this something that I can help somebody's other financial picture? As I mentioned, the buy now, pay later, the opportunities are endless, and that can be a little bit overwhelming for credit unions. And even for my team, it's been a little overwhelming from time to time. And so adding things incrementally, we've worked with the team quite often with different ideas that we have and different solutions. But I would say the main thing is just knowing what to do with the data and then just reassuring your members and how you approach that with them.
Thank you. Kareem, you want to take it as well?
Yeah, sure.
Yeah,
I think I've seen 4 to 5 challenges that credit unions face when they're adopting open banking. The first relates just to the technology integration, right? Many credit unions operate on legacy core systems that may not easily support open banking APIs or real-time data integration. So, modernizing your infrastructure to enable secure, seamless data access can require some investment and operational change. A second, consideration for credit unions when adopting open banking relates to some of these data security and privacy concerns. And I know Akoya has done a lot of great work to help credit unions minimize those. But anytime you're handling member permissioned financial data, it introduces heightened cybersecurity risks and legal responsibilities. And so you really got to implement robust data protection protocols and also communicate clearly to your members how their data is going to be used. On that front, open banking can sometimes require, some amount of member education and consent, right? So open banking relies on informed consumer consent, and many members might be unfamiliar with what data sharing entails. So you've got to invest a little bit in education and transparent communication to ensure that members feel confident and in control of their data. Another issue that can pose a challenge to credit unions when they're adopting open banking is that it'll involve some amount of vendor and partnership management, right? I mean, to participate in open banking, credit unions often have to rely on third-party service providers, whether it's data aggregators, fintech platforms, et cetera. And so you want to make sure that you're doing a good job of vetting and managing these relationships while also maintaining compliance with data use standards, which can be kind of complex and resource intensive. And then finally, there has been some regulatory uncertainty with all of the kind of changes in the macro environment. Section 1033 does provide some guidance, but the full regulatory framework around open banking is still evolving. And so credit unions have got to stay agile. They've got to track new rules and industry standards to make sure that your practices are compliant with both state and federal requirements.
Paul, do you have anything to add?
Yeah, great points. I'd add there's a cultural shift within the organization of thinking about this as a channel. The financial industry has stood up an online channel, a mobile banking channel, and I think there's now this cultural shift in how do you manage your third-party banking channel. And I think that takes a lot within an organization to kind of think through the technical complexity, operation, also the UI, the partnerships, and so forth. I think it's that shift of now you've got, you're trying to be where customers want to, or members want to be. And you've got to set up that channel to support them. I think the points around technical integration, I definitely support. It can be very costly to go and try to build this timely as well. Even some of the largest financial institutions, it took them multiple years to try to figure this out and stand things up. So I do think thinking about this around the partnership angle of how you can work with partners in the ecosystem who are aligned to the outcomes that you want to drive and some of the principles that you have around protecting your members, protecting your data, and enabling this in a secure way. Because it can become a complex project that can get a little overwhelming without the right parties at the table.
Okay. Let's end on a question looking ahead with any final advice to credit union leaders on what they can and should be doing around open banking. This is going to be our last question before we open it up to other folks to submit their own questions. Paul, let's start with you.
Yeah, the first thing for me that comes to mind is to protect your members and to protect your systems. Because today your members are doing open banking, but most likely not doing it through safe and secure APIs and through a front-end permissioned data sharing. So protect the credit union and the systems and the infrastructure. I think that is the most important thing to get that firm grasp on that. And then I think it's then how do you use and harness that data to go and compete and provide better experiences across lending and underwriting and so forth, and really harnessing that data. And then the third piece I would say, Kareem alluded it to a little bit earlier, is that regulation is here, and it's coming for any credit union above 850 million in assets. There are requirements over the next 3, 4, 5 years to stand all this stuff up and to ensure that it is secure and safe for members to use. So to keep that in mind as a reason to start now if you haven't already.
Kareem, same question for you.
Yeah, I've got maybe 4 or 5 pieces of advice for credit unions who are, undertaking their open banking journey. The first is to pilot, then scale, right? Start with a narrowly scoped use case like second look underwriting or account monitoring before you expand to broader applications, and use those early wins to build internal buy-in and also member enthusiasm. Another piece of advice is to invest in technology partnerships. It is, as Paul said, very costly and difficult to build open banking infrastructure on your own. To do this well and in a relatively efficient manner, you are going to need to collaborate with fintechs and vendors who specialize in open banking APIs to bridge your own infrastructure gaps and not tax your own internal IT resources. You're also going to want to invest in, cybersecurity to address member concerns about data breaches, encryption, and access controls, et cetera. The third piece of advice is invest in your compliance early, right? Embed clear consent mechanisms, do your fair lending testing, make sure you've got clean audit trails. All of that is going to help you avoid regulatory headaches later. Fourth is just to really prioritize that member consent and transparency. Make it easy for your members to understand what data they're sharing and why it matters and how it benefits them. Building trust is just as important as building the tech. And then finally, open banking presents an opportunity for credit unions to turn their data into deeper relationships. So use open banking data to double down on personalized, community-focused services. That's something that big banks can't replicate.
Thank you. Amy, before Q&A, the final word belongs to you in speaking to your peers at the helm of our nation's credit unions. What are your thoughts?
My biggest thing would be don't wait. These other 2 guys have talked about technology and all the things out there for our members and, protecting your credit union, protecting your members. Don't wait to get involved in this data. We have to protect our members by fighting back against the fintechs and providing them the products and services that we specialize in that are necessary for them. And I think that this just gives you that competitive edge to get that full picture. I think also looking into the trusted partner, like I mentioned before, not relying on the other ways, looking into the API. We even have an integration with our core. And so we're able to not only get data from other financial institutions, but we're using it to also simplify the data that's already within our core. So that's great. And education for your members, education for your employees, and just everybody understanding what this is. That's the biggest piece.
Okay. Thank you, Amy. And with that, it looks like a number of you have already shared some questions. We have another 15 minutes, so I'm going to jump right in to the questions if that's okay. Kareem, we're going to start with you. First question. What is the unique predictive value of cash flow data?
Yeah, I think cash flow data has a lot of unique predictive value. The key unique predictive value of cash flow data is that real-time granular view of the consumer's balance sheet versus credit reports, which perhaps provide a more static historical snapshot that can be delayed by weeks or months. So the first thing is you're getting cash flow data allows you to get really the truest measure of the consumer's balance sheet possible. The second thing, and I think Amy alluded to this, is cash flow data will capture some transactions that credit reports will miss, right? Whether it's buy now, pay later, earned wage access, recurring subscriptions. It just allows you to see more of the consumer's balance sheet. It also provides you, open banking data and cash flow data provides you with a pretty good indication of how a person manages their finances when they have good jobs and when they have bad jobs. And it's worth remembering that something like a third of high income American households live paycheck to paycheck. So that having that kind of visibility is super useful. And then, of course, cash flow data enables better scoring of thin file or no file consumers who lack or have limited traditional credit histories. And then finally, I think a thing that's really cool about open banking and cash flow data is that it's relatively assumption free. If you consider a common credit report attribute is like inquiries. And we assume that like a lot of inquiries means financial distress. And we look at inquiries because they may be, coincident to some other problem that you can actually see directly in the cash flow data, right? Cash flow data allows you to ask much more directly, like, did this person lose their job? If their paycheck was expected by a certain date and it didn't arrive, the data clearly reveals that. You don't need to make any assumptions. So I think that, there's a lot of unique predictive value in open banking and cash flow data.
It's interesting. I think there's another question that came in that aligns well with your way of thinking, but I'm going to direct it at Amy. So if you take what Kareem said about the predictive nature of cash flow analytics and you put it alongside our traditional credit signals that we use in underwriting consumer credit risk, what is the interplay like between those two, cash flow data and traditional bureau data? How does Trias use it? Do they use it, and in what capacity? We can't hear you again, Amy.
Can you hear me now?
Yes.
Okay.
You're back.
I don't know why I have to move the mouse on my screen in order for you to hear me, but here I am. So obviously we always look at the credit report. That is our first. It pulls with the application, everything. We actually put more look into what is going in with the cash flow data. So when we're looking at that, we're taking a look at, how many times are they going negative in a month? Are they going negative? When they do go negative, how long are they negative? How many days? What is the dollar amount? How many times does that happen in 365 days? That kind of thing. When we look at discretionary income in underwriting, sometimes people have less than $2,000 and we think, how do they pay for their goods and services, their gas, their insurance, that kind of stuff. Then we're going to really take a look at each transaction, not necessarily the nature of the transaction, but are they making it? Are they budgeting that money enough that my loan payment is going to live through, the ebbs and flows? We do see a lot of our members who go into the red in between pay periods, just like Kareem said, a lot of high earning households that are living paycheck to paycheck, and a lot of them are going negative in between there. And, is that an indicator that the loan is then going to default? And so we're really looking at, yes, we're paying attention to the credit report, but the cash flow analysis is showing us live data that's actually happening.
Thank you. So there's some follow-up questions for I think it's directed at you, Amy, but I think anyone can chime in here. The question is, the panelists mentioned first-party data several times. Can they elaborate on what that means and how that fits into the conversation? Do you want to take that first, Paul?
Sure. I think by first-party data, the panelists would mean simply data already that sits with the credit union, but it might not have. You might not have easy, readily access available to it. So by building some of these APIs, you not only can help your members access that data for a third party, but you could also use it for different divisions or organizations within your credit union. For example, you might open up the deposit data through internal APIs, where your lending team could easily consume that for pre-approved offers or new to credit lending, and so forth.
Yeah, it sounds like there's use cases both on us and off us. Amy, I'm going to bring this back to you. So I would assume you have members that not only bank with you, but bank off you, and you're able to get a 360 view regardless of where they bank. Is that accurate? Can you unmute yourself one more time?
Can you hear me?
Yes.
Okay. So we obviously, if they're a Trias member, our loan officers are pulling the open banking information, and that is analyzing everything in our core that we have access to, but it's so quick and so easy and much easier for us to digest that information. And let's pretend that they also bank at Wells Fargo. And then that's when we're asking them for that secure link. And then they are able to give us that information as well. So we can compare both things, and it's really helpful. So yes, the answer is whether they bank with us on or off, we're able to gather the information.
Okay, thank you. Kareem, the next question is for you. Can you speak in more detail about the compliance? It's probably for Paul as well, but can you speak in more detail about the compliance considerations associated with open banking and 1033?
Yeah, I think there's broadly 4 or 5 different key areas of compliance considerations to think about when adopting open banking. The first relates to adverse action notices, and I'm sure most of the participants on the call know this, but when you use cash flow data and credit decisions, you've got to clearly articulate the specific reasons for adverse actions like declines or lower credit lines or higher rates. And unlike traditional credit report-based reasons, cash flow derived reasons may differ significantly and may require some thoughtful mapping to adverse action codes. A second key compliance consideration when adopting open banking relates to fair lending. The good news is regulators generally view cash flow underwriting positively because it can expand access to credit, particularly for thin file and no file consumers. However, lenders do need to be vigilant about potential biases embedded in any new data source, particularly if certain customer segments systematically have different cash flow patterns. So you're going to want to do regular statistical testing for disparate impact to make sure that the models that you're using and the data that you're using are in fact supportive of fair and inclusive lending practices. A third compliance consideration, and I think I spoke about this a little bit earlier, really relates to kind of the scope of the access that you have to the cash flow data and the scope of the consent that you get from the consumer, right? So are you collecting cash flow data on a one-time basis? Is it a one-time snapshot? Are you collecting it on an ongoing basis? That decision, largely depends on your terms and conditions, and importantly, on the scope of the consumer consent that you obtain. So, one-time access does provide a snapshot, but it limits your ability to do ongoing monitoring. Ongoing access enables real-time insights, but it does raise some privacy concerns, and it can also complicate customer interactions. So for example, if a customer changes their bank login credentials, you may have to reach out and say, hey, you don't remember this, but we've been regularly reviewing your cash flows and you've updated your password, so can you please reauthorize access? And if you haven't had clear upfront communication with your members, then going back for that kind of renewed access can create some awkwardness and potentially diminish consumer trust. One thing to think of, one compliance consideration with all kind of alternative data sources is sometimes you'll find variables that are predictive, but like maybe you shouldn't use them even if they are predictive, right? So like, because they represent certain reputational or compliance challenges. So for example, you may observe through cash flow data that a member, the amount that a member spends on medical expenses is increasing. And that is probably predictive of default risk. But if you use a variable like, the rate at which your medical expenses are increasing, it could unfairly penalize, necessity-driven spending or discriminate against those with health issues. Similarly, you may have visibility into payments that are being made to certain kinds of businesses or in certain kinds of merchant categories, right? Like gambling or smoking or pornography. And these could predict financial strain, but they might also provoke privacy considerations or consumer backlash if they're perceived as judgmental. And then again, I think the privacy and data minimization considerations here should really be kept front and center. Cash flow data inherently includes highly detailed personal financial information. And so regulators have put a lot of emphasis on data minimization principles, meaning that lenders should really only collect the cash flow data that is necessary for underwriting decisions and discard excess or unnecessary information promptly. You're really going to want to make sure that you've got strong privacy safeguards in place to ensure compliance with things like the Gramm-Leach-Bliley Act and other state-level privacy statutes. And then finally, as with all things kind of compliance, you really want to make sure that your record keeping and your auditability is high, right? So you want to maintain detailed auditable records of how the data was sourced, how it's normalized, if you're doing any feature engineering, and of course, ultimately, how cash flow data is being used in decision making. By documenting all of that clearly, it makes sure that you can defend your decisions and demonstrate kind of adherence to some of these fair lending and privacy considerations that I was speaking about earlier.
Okay, thank you. Okay, this next question I'm lobbing at you, Paul. I'm going to read it directly, but what suggestions do you have for credit unions who are looking to prepare for CFPB's 1033 regulation and leverage open banking use cases to receive data to create better member experiences?
Sure. So for context, the CFPB has established a rule called the Personal Financial Data Rights Rule that went into effect in January of this year, so just a couple months ago. That rule requires all financial institutions, banks and credit unions above 850 million in assets to stand up open banking interfaces so that third parties can access that information on behalf of the member authorization. So one advice there is to, if you haven't already, to start now and to start planning for this, because it is a rule and law today that you'll be required to do. In essence, the obligations on the credit union are to supply deposit data and credit card data through a developer portal or an interface that is accessible to your member via third-party application. And there's some other obligations around the length of data, the types and so forth, terms and conditions. But in essence, you've got to make sure that that data is available to your members if they want to access it and permission it to a third party. So start planning on that because it is a law and you'll have to comply with that over the next few years. The Bureau has established some tiers based on asset sizes, but over the next few years, any credit union above 850 million will have to comply. And then on the inverse side, if you're going to consume that data from other financial institutions, I think the most important thing is to really start with the member experience, where the member is in the flow, that you decide to populate that ability to access held away data. Make sure the value proposition is clear to the member around what it means to them to be able to pull in that held away financial data to help them with a loan or an underwriting, or to help them with a budget and so forth, and to make sure that experience is super clear to them. And then I think other components around that, around making sure the connectivity, the partners that you're working with have strong connectivity, conversion rates, the data quality is solid and so forth, because ultimately that's going to drive your engagement and use with the member.
Thank you, Paul. And that will be our last question because we're at time. Thank you to everyone who asked a question. If we didn't get to your questions today, it will be answered in post-webinar follow-up. I can see many of those questions are piling up now, so worry not, we will get to them. Panelists, thanks so much for taking the time to chat with me today. It was great to have you here. Bye, everyone.